What's up everybody? Tom here with another video. In today's video, we're talking about everything to do with the markets for the week ahead, including our technical analysis levels for the SP 500, Nasdaq, Tesla, Apple, Bitcoin, and more. It looked like we had bulls on parade, but then all of a sudden, the 20 moving average and 50 stopped the Nasdaq and SP 500 right in their tracks. Are we about to see another big bear bust? Stay tuned. All right, hello and welcome. So overall, we're going to look here at the markets and what happened last week so we can get a bit of an idea on what might be happening for the week ahead. And we'll take a look here at Apple, Amazon, and Facebook, these FANG stocks. Notice Apple ended the week plus 0.17, Amazon plus 0.16, and Facebook actually down 3.78%. This doesn't necessarily bode well for the markets because while some are green, there's a lot of red smattering through these businesses, and these are the large ones. If we take a look at the Friday session and we think about what happened during the session, we had up, down, all around at the beginning, a little bit of selling, a little bit of buying, and then straight into the close, all of the market indices dropped. And this is the important factor. Wall Street sold into the Friday close. Remember, when they are buying into the close, we know their sentiment mostly for the next day. When they are selling into the close, the sentiment can be quite negative for the next day. And there are some key important levels that we need to look at throughout today's video to really understand what they were trying to do. If we also have a look here, energy through the energy crisis continues to skyrocket, plus 3.08%. Everything else mostly flat to down. So if it wasn't for the energy sector, you'd almost think that the day should be more negative than it was. Let's move over here to the SPY and understand what happened. Why was the market negative? What kind of level does this show us? And is this really important for us to understand? So firstly, I just want to show everybody this downward trend that we've been in. We moved forward to the 440 level, which is a key resistance, and we found a rejection candle. Many of you will know this as a pin bar. Some people will know it as a shooting star. It is a bit of a reversal style signal. It happens around a 20 and a 50 exponential moving average as well, which is a very key zone for the market to be closing. And you'll notice that it ends up closing near its low. So it's actually underneath the last day of trade. This is big because now we look to fill the gap. We look to move down to that 430 kind of 5 zone. And this is where the bulls and the bears are going to fight it out for the week. And you know what's most interesting is that they closed it at the maximum pain threshold for last week's options. So as you know on this channel, we like to use options to understand the key ranges for the week ahead and where we expect the market to be trapped within those zones. And it's a really different, unique way of looking at the market. So I don't think many people on YouTube use. So if you do enjoy it, please remember to subscribe and smash that like button. It does help us out. So we trapped above this 435 range last week. The resistance here got gapped above, moved forward, rejected, and now looks to move into the gap range. Let's have a look at it on the SPX on the 2 hour. So I want to just talk about some scenarios that we see happening this week. If the bulls are going to go on parade and really try to tap this market back up, around this area of 43.70, 43.60, you'll expect buyers to come back in. Previous resistance, 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 resistance should act as support. And this is where we hope for our lightning bolt, our trough, our peak, our higher trough, and then our movement forward. If we get through there, we break through our great trend line on something like the daily, well, it looks like we're looking up. And specific interest will be put on the 44.30 this week as well. A closure above there will snap off that shooting star candle, take out stop hunts above here. So basically all the shorters will be taken out. And I think the bulls get firm control of the market after that point. So that's going to be a very interesting zone. So we want to box up these areas. A trader will usually look, or an investor will usually look at a zone. They'll decide on a range, and then they'll decide on that range being an area of interest for them, so that if the market does come into this area, they look for potential turnarounds. So that would be where the turnaround, the bull case is. A closure below this zone though, below the 43.60, what's that going to do? It's going to put a lot of pressure back down onto the 4,300. I would expect further selling to come through from a technical level. It goes back to the 4,300. And as we know, any closure underneath the 4,300, guys, whoo, it's going to be fierce. 4,300 basically to the 42, the next area. And then if it gets underneath 42, we know 4,050 We've detailed quite a few times why this is the biggest zone that people will be looking at. The 50 exponential moving average, where most great corrections go to on the weekly. If you're not sure why that is, let me just quickly scroll back and show you guys how often it touches this zone and bounces throughout history. Very, very, very good at predicting kind of the smaller corrections, and a bigger correction will usually bust the 50, and then that only happens a very rare time. So as you know, this only happened 2 times since 2012, other than the pandemic itself. So you don't want to usually be calling for those, but if you're looking for that tasty kind of dip levels, these are the ranges that many people are looking at from a technical perspective. Obviously, you've got to make your own decisions. Let's now have a look at the options, and I want to just talk about where the market closed and how the market reacts to making optimal profits. So we know that the SPY closed right around here. Now, funnily enough, what do we see there being the least amount of here? Oh, that's right, options. There is less puts and less calls at this zone. This is the perfect zone for Wall Street to have the lobster dinners and the lobster lunches, where they literally made a truckload of money off options buyers and sellers that don't know what they're doing. So we had 420 as a huge put wall. We had, of course, this 440 as a huge call wall. Where do they expire at? Right in the middle. And if anything's going to show you why this type of stuff works and gives you a great indication of where the market's going, it's going to be something like this. Look at it. It's just phenomenal how good they were at keeping it in the trap. Now, when we take a look at the options interest strike for this week ahead, we have a very important date, the 15th of October, the third week. That's right, the third week of every month, we get the biggest options expiry. And this one's a big one because we have that 450 SPY call wall. So basically, this is the 450 SPY call wall. They will not want the market to be above there come Friday for paying out, or at least they wouldn't want it too much above that. So we basically have a bit of a resistance area that we know is in the markets. We also have a huge amount of smattering of puts, and they're all over the place. We've got 420s, we've got 430s, we've got every 5 points seems to have a whole bunch of puts on it. And this will be an evolving situation. So come Monday, once we see the close, we'll update this in the next video and we'll find out where the biggest strike's coming in. So maybe that will be a 420 strike and this will just explode like it does last week. And once we start to get that, then we get our parameters for a range for the week and we expect where the market could go down to and where the market should go up to. And it's a really great thing for us to look at. We also can look at maximum pain theory. So that's where we expect the markets to be by the end of the week. And at this stage, a 440 close at this current stage would be the perfect expiry for them. I think this will update quite a lot as we see the price action come through the Monday session, Tuesday session, etc. And remember, Columbus Day, while it is a public holiday, is not a market holiday in the US. The markets will be open, so you can go check out the times to check out what's going on there. And we will be doing the close stream on the Monday close. So make sure you come and join us for that. Let's now move over to Tesla. So Tesla had a week of playing with the 800 level. And we know this 800 level, my goodness, what a resistance zone for it. It's found resistance so many times at this area and then just keep busting through. Not a bad week close. We still have our great trend line that's holding up throughout the longer term cycle. And if we go down to the daily, what you'll notice is every time we go above 800, we cannot hold the daily close there. So what you're looking for as an investor in Tesla is above 800, and that will expose 820 and more importantly, the 880 zone and participation that we thought could come through. And that's going to be a very, very key level. 760 remains kind of a key support. We've got the 20 moving average as well on the way up on the daily, being a bit of a buy level. And I think the most important thing for Tesla traders to think of is that currently we're still kind of, slowly trucking up there with decent price action. We're trying to put in those higher highs, but the 800 is just such a big zone that traders will be looking for. About earnings, I believe, is about 11 days away as well. So that's going to be a very big one. 20th of October, we have an earnings call, and that's going to be something that a lot of potential could come into the market. Maybe we might see some ramping into that zone. Now, whether it's Michael Burry or it's somebody else, someone is trying to short Tesla still. We've seen this in the last 3 to 4 weeks, and I take it as a positive sign, really, when they've got 700 calls, 720 calls, 730 calls, puts, everywhere. These puts are just showing us that The market is unlikely to be able to bust below those zones. There's so much money being put into short against Tesla. And this week is like the same as last one. We have 800 and then 850 calls being the biggest ones. If we're allowed through 800, what you'll notice is a monstrous explosion of calls. And a lot of people say, but Tom, you always talk about the price or these walls or call walls holding back price. They do, up until a point where the price action, remember the most important thing, goes through a key resistance. And we saw this with AMD. We saw it with Moderna earlier in the year, where once we cracked a key level, everyone in retail went nuts. Everyone started buying it. Everyone started talking about it, and they exploded the positions of calls. And what happened was so many get put in that it allows it to go through. It basically just continuously ramps just through the sheer power of that. So as soon as you get above 800, a Tesla trader would be looking at stock tweets, would be looking at Wall Street bets, would be looking everywhere to make sure the bullish sentiment is at all-time highs, the message volume is going out of control. It's what we call social trading, and it's very powerful when you recognize it with the price action. That's the key. Both together, beautiful stuff, and we'll be covering it on this channel as well. Let's move over to Apple. So Apple is one of the biggest stocks. Well, it's the biggest stock. We look at this to show us the way of what we expect to happen in the market. So basically, Apple usually dictates whether the market is going to go more bearish or it's going to go more bullish. This is a good precursor kind of sign. It got to that 20 moving average here on the daily, similar to the SPY and to the Nasdaq. We'll see soon. It rejected it. It came back down again, and it's still just above the area. Where we're looking for Apple to go bad is going to be, or the rotten apple is about 142. We close underneath 142. Then we start to put pressure back on this zone. And remember, we have our giant trend line that we would love it to hit if it could. This is a very cool trend line, and we've used this a few times now throughout the last year to pick up positions from a technical based perspective. So this is really exactly where we'd like it to go. Previous resistance, fantastic. And if it does, great. If it doesn't, and it snaps off this little high here, similar to the market, all of a sudden, I think bulls will come back in and they'll be pressuring Apple up higher. Because remember, a 145 break on Apple is pretty significant. And if that occurs, then we move back up to that 148, the 150. And I think a lot of buyers will come in. A big important zone here between the 20 and the key support. We'll be watching through the Monday, Tuesday sessions. Very, very important. Apple call walls and put walls, less than last week, more convoluted. So last week we just had super amount of calls. So many calls that Apple was never going to get above. This week, you'll notice the red line and the green line are almost even at most of these strikes. So less information currently for the 15th of October. We'll continue to update this and see whether it can help us out. Let's move over to the US 10-year. So this is the specter in the room. This is the one that I think people have been sleeping on. And we've talked about it a few days. I believe it's also a big reason why we started to see a little bit of sell-off into the Friday close. We had a spike breakout. So we talked about the 1.57 closure on the daily. We knew that would probably put weakness onto the Nasdaq, because the Nasdaq, when we get interest rates or the US 10-year yield goes up, QQQ Nasdaq tends to go down, at least initially. I don't believe it's something where longer term investors need to worry so much as long as the US 10-year stays under key levels. But now that it's at 1.615, you would think that this goes and pushes towards that 1.75 resistance. And if it does push towards there, or even the 1.95, this particular 10-year should put pressure on the Nasdaq towards the weakness, at least initially. So watch this chart. If this keeps ramping, QQQ can certainly go bearish. That's the potential that can occur. And this was a pretty significant little breakout bullish high here. And the follow on, the downward pressure on the Nasdaq, it all makes sense together when you look at it that way. Another thing that people are worrying about in the world is, of course, the price of oil. US oil hits $79.50 a barrel, closes the weekly incredibly high. This is the first time it's closed above here since 18, so it didn't even, and look, after that, you know, we're talking 2014. So barrels have been cheap for a very long period, and now all of a sudden they're spiking up. Previous support became resistance, so we know that US oil is trading very, very technically. And then we have resistance, support, support, resistance. So around that 85, 80, 86 barrel is the next expectation? US oil traders probably are rejoicing because there's some serious pressure here coming through, and it is putting a lot of pressure on that buy side. We have a bit of a moving average pullback that's now occurred twice as well. The 50 had picked it up once, the 50 picked it up twice. So I guess the 50 is where a lot of people on the 4-hour will be watching it for pullbacks. But at this stage, it looks bullish. What do you guys think in the comments down below? Where do you see US oil going by the end of the year? Let us know. I'm super interested in seeing your calls. Let's move over to the Nasdaq. I'm sure a few people shorted this level, 15,000 on the dot, just like 4,400 for the S&P was a big bit of news. Now we have the 15,000 on the Nasdaq. And look, all of this stuff started shorting off, and we saw non-farm payrolls come out on Friday, and it was, a bit of a crappy number. Is that really the reason why the market's going down? So a lot of people would conventionally look at it and say, oh, well, non-farm payrolls, this is the jobs number. If it's a bad bit of news, won't that mean the Fed won't taper earlier? I think the Fed's made its decision to taper. I think the market realizes this. It used to be slightly bad news, or bad news was good, because the Fed would most likely not do something, but we'll see. The FOMC meeting minutes are coming up. I have a feeling they're going to taper regardless. However, we'll find out. And that could be another sign for why there's weakness. Remember, there are so many bearish concepts out there, but there always are. There could be, you could look at the energy crisis, you could look at the Evergrande situation, you could look at the US debt ceiling, and still that's not really fully resolved, I don't think. And what we're looking at is so many problems. But remember, follow the price action first and foremost. So 15K gets hit, 20 moving average, 50 exponential moving average, slammed straight into those, sold off, almost fully filled the gap here by the close. And there's a bit of a war zone between this area here. So this is the zone of what we're looking for. And if buyers are going to come back in, they're going to try to buy it right off this 14 kind of 7 area. If they can pick it up, create lightning bolts, put pressure back on the 15, close above the 15, then we move towards cleaning up that gap, 15.2, 15.4, and then of course resuming full bull trend. If the bears are going to get in control, they look to move it underneath this box and then slam it straight back into that support. And I think if it puts more pressure on this trend line, I feel like the trend line might close below, and then we might even see that 14,050. This will be a lot on the US 10-year and just general overall bearish sentiment. That's a fairly negative kind of candles. They are not exactly what I would call super bullish. QQQ, exact same thing. Key levels I've got lined up here that you'll be wanting to look for the week ahead. And if we have a look at the weekly, you'll notice it's like a giant long leg doji. So you've got your high, you've got your low, and you've got the body just in the middle. So really, again, indecision by the market here. It shows across the board, and we look for further direction. Be fast, be nimble. That's the way that we've been recently. Bitcoin, on the other hand, still looks pretty damn good. This has been a very big breakout here. We are seeing some stabilization in the coins. So Bitcoin stabilizing around 55. I guess I would expect Bitcoin to probably hover here, maybe even move down to 52.5. And if it does, some money might be coming out of Bitcoin, moving into things like Ethereum, moving into things like Cardano, KSM, DOT, whatever else you want to look at. They're the types of things that generally happen as long as Bitcoin stabilizes, because the king's back. Now it needs to stabilize, and market moves or money moves into the other areas. BTC shorts is another thing we look at on this channel, just to make sure that there's no nasty whales attacking us. In this case, they are not, which is fantastic news. All right, let's move over to stock market pullbacks. I just want to talk about this for 1 second. So I brought this up on the last video, and I discussed the idea that in average years, we see around, well, I guess you would say 4.6, but I would say an average since monetary policy is about 2 to 3. So let's call it 2 to 3 pullbacks. But after a big collapse in markets, you'll notice here, GFC, in the next year and the next couple of years, there was still a lot of volatility in the market. We have seen an unbelievably low amount of volatility in comparison to what we usually see with markets going up and down all around. And that's very strange. I will say that. It is very strange. We've only had that one big pullback. So realistically, is this unusual? It's strange, but overall, you do not expect more than a couple of bearish pullbacks per year. And why that's important is because when you bring stats like this together, remember, it pays to be an optimist in the markets over being bearish. If you're bearish all the time, unfortunately, you'll miss opportunities. If you're bullish all the time, well, that could be good if you're buying quality, but realistically, it's all about realizing that you're finding bear pullbacks or corrections to be able to find better levels to own your favorite stocks at the best prices. And that's what you're looking for there. So week ahead, we've got, of course, bank holiday technically in the US, but the markets will still be trading, maybe less volume there. We've got CPI data coming out Wednesday, core CPI as well. And then if we keep going down, we have FOMC kind of meeting minutes coming out 2 p.m. New York time on the Wednesday as well. That's going to be a big one. And then we've got core retail sales and retail sales. So it's a jam-packed MPPI. We've got jam-packed week of news. All of this news will compact together to really create the sentiment story. Remember, follow the price action is probably better than interpreting the results, because the price action will tell you how the big boys are doing it, the big brain people over at Wall Street. Thanks so much for watching, guys. If you enjoyed the video, please remember to smash that subscribe button. And of course, we'll see you live for the closes for the week. I'm excited. I'm super pumped. And I hope you guys are too, because it's been some good day trading going on, but you've had to be fast, nimble, and quick. Good luck, guys. Stay tuned for more. Bye.